Markets look to be pointing up a little bit this morning. We might get a little bit of follow through here. Overall, we just triggered that buy signal from a fairly low level. So a little bit of consolidation here, not surprising. We kind of hold around this 4,200-ish level. Here's what you need to know before the bell. Market rallied very nicely last week. S&P was up about 6% last week. Now remember, just the week before, we're all in a panic because of this decline in the market. And we were talking about, hey, be careful here. Markets are deeply oversold. We're going to get a rally. If that triggers a buy signal, that's good. And again, in just last week's trading session, 5 trading sessions in a row, markets rallied 6%, completely reversing that break of the 200-day moving average, took out the 20 and the 50-day moving average. So all those resistance levels we were worried about going up, market just ran right through there, with not much effort. This also went right across other asset classes. We'll get to in just a second here. But look, markets are now back to overbought here on a short-term basis, so expect a little bit of a consolidation here. Here's what's going to be important. We may not hold this 50-day moving average, but if we can hold the 20-day moving average and not retest the 200-day moving average, that would actually be fairly bullish. But again, a bit of a pullback here won't be surprising. We're also breaking out, and this was something we talked about last week, is that we have this kind of downtrend channel that the market was building, and market actually broke out of that on Friday as well. So again, lots of kind of good bullish backdrop here to stocks here short term. Markets look to be pointing up a little bit this morning. We might get a little bit of follow through here. But again, overall, we just triggered that buy signal from a fairly low level. So a little bit of consolidation here, not surprising. We kind of hold around this 4,200-ish level. And then the market potentially can make another move higher heading in towards the year end. We'll see. Bonds, of course, is the one thing that everybody's been kind of focused on as of late. Obviously, bonds have had a very tough year this year. Markets were making a nice rounded top in the markets again. Yields moved very quickly last week on that employment report. Came down, retested support at the 50-day moving average. Now, again, this is yields, so it's the inverse of bond prices. Yields came down, triggered that sell signal. So again, that suggests that we're going to get lower yields, but again, probably not right away. So kind of expect a rally in yields back up to about 4.7, 4.8%. Certainly won't be surprising. If the markets can do that, not go above 4.8, and then come down and then take out these lows that we've been setting here over the last kind of couple of months. So again, a bit of a rally here. Markets come down, take out this neckline. That's a very nice head and shoulders top for yields, suggesting that yields are going to go lower. Again, yields right now, short-term oversold. So again, that's what I'm saying. Kind of expect a bounce in yields. Might even see some of that today. So bond prices come back a little bit, give you another shot to maybe add a little bit of bond exposure to your portfolio. But if we start seeing much weaker economic data as we get into the first year, then you would expect to see potentially lower yields here, particularly as inflation starts to come under pressure. Lower yields are actually a problem for the Fed. That's what you need to know before the bell this morning.